Are you hungry for the latest news and trends from the internet? Welcome to What's Cooking on the Internet, your one-stop shop for discovering the hottest digital delights. Hit that subscribe button and let's get cooking.
A volatile week ahead. Can the US economy take the heat? What's your take? Share your thoughts in the comments. Investors are bracing for another bumpy start to the trading week, and a pressing question is on everyone's mind. Can the US economy handle the pressure of rising debt and falling credit ratings? The answer is far from clear, and the stakes are high. Recently, Moody's ratings dropped the US government's credit rating from AAA to a 1, citing the country's ballooning budget deficit. This move sends shockwaves through the financial markets, with investors getting nervous about the US sovereign bond market. The debate over unfunded tax cuts and slowing growth is adding to the uncertainty. President Trump's decision to shake up trade deals has left many wondering if the US can keep its economic momentum. The consequences of a potential downturn are too dire to ignore, and investors are taking notice. Treasury yields are a clear sign of growing concerns. 10-year yields have risen to around 4.50%, while 30-year yields have climbed to 4.99%. If yields keep rising, we could see levels last seen in 2023 come back into play, a worrying sign for the economy. Experts warn that the downgrade could create a bear steepener spiral for US yields, further pressure on the greenback, and make US equities less attractive. This would be a devastating blow to the economy, and one we can't afford to ignore. As we move forward, it's essential to take a closer look at the US government's fiscal trajectory and the potential consequences of its actions. Can the US economy withstand the pressure? Only time will tell, but one thing is certain. The stakes are high, and the consequences of failure are too dire to ignore. In the coming weeks and months, we'll be watching the US government's fiscal trajectory closely. Investors will be on high alert, and the market's reaction will be a telling sign of the economy's resilience. As we navigate this uncertain landscape, it's essential to remain vigilant and proactive, working to mitigate risks and capitalize on opportunities. Ultimately, the US economy's ability to withstand the pressure will depend on the actions of policymakers and investors. By working together, we can create a more stable and prosperous economic future. But if we fail to act, the consequences could be catastrophic. The choice is ours, and the clock is ticking.